Overall, the quarter was quite good, up 17% in revenue and more than 20% in earnings. So really strong earnings overall. We did have good sales in our off-road vehicle segment, but the retail sales, actually what our dealers sold to customers, much like when you'd go to Wisconsin and buy a razor, that's what was below expectations. And we did have some production issues that caused our dealers to have an unavailability of some of our key products. But we worked through that throughout the end of the quarter and actually found momentum in December that we expect to carry forward into January in the first quarter.
But and your gross margin's also disappointed. So, Scott, does this mean that the dealers were overly optimistic in buying from you and unable to sell it to customers? I'm still seeing what's the disconnect? Because your numbers were good, but the dealers weren't. So where's the issue?
No, Brian, actually, dealer inventory was down 6% for off-road vehicles. So we're actually, the dealers would prefer to have more inventory of certain products, and we're working through the first quarter to make sure that they have everything that they can to maximize their sales opportunity. Really, it was mostly in our snow division with the lack of snow across much of North America, especially the central region and the mountains. So it was the snowmobile that were down, more than 10% for the quarter that brought down overall retail.
What can you tell us about the demand that you're seeing right now, Scott? I mean, has tax reform impacted the consumer in that they are more willing to buy these sorts of recreational vehicles?
Certainly tax reform was a tremendous benefit to Polaris with over 55 cents a share that'll benefit us in 2018. We do expect the economic reality when you put thousands of dollars back into consumers' hands that will help our business and industry. January so far has been good, but we have to wait and see how that plays out through the rest of the quarter and the rest of the year before we're willing to raise our guidance based on it.
Back to the gross margin issue, Scott. It was a disappointment for a lot of the analysts out there. Is it because you have to discount to get rid of inventory? I mean, you've been trying to work down higher than optimal inventory levels for quarters now. So are we starting to see that take effect by the discounting?
No, actually, our inventory in aggregate is in very good shape. We are no longer trying to take inventory out of the channel. In fact, we were trying to put inventory into the channel in the fourth quarter. Really, the margin story had a couple of factors, primarily being we're still reserving warranty accruals for issues that we think we might have to pay for. So really, in the entire year, over $50 million of incremental warranty costs that we accrued for that we didn't expect to have. And that was the largest drag. But we did have some production issues. Commodity costs were a little bit higher. And, going from here, we talked about 40 to 60 basis points of margin improvement next year. And we really feel like the earnings power of the company is quite strong at this point. But we did not demonstrate that in the fourth quarter.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.